Dalal Street fails to hold on to opening gains. Nifty and Sensex end 0.25% in the red. Broader markets underperform. The mid-cap index falls over 1%.
The shares of State Bank of India decline after third quarter margin shrink to a 30-month low. Deposit growth rises by just 2% sequentially, but asset quality improves and slippages drop to a 2-year low.
Trent delivers an inline set with moderate expectations in the third quarter. Revenues are higher by 34% on a year-on-year basis, but the stock tumbles 8%. Meanwhile, Swiggy's losses mount on higher investments in quick commerce, but the digital platform business maintained its guidance to achieve EBITDA break-even in food delivery by the third quarter of FY26. Hello and welcome to Markets Forward, your go-to show where we aim to get you all of the key data points and all the day's action. Plus, of course, we gear you up for the next trading day. I'm Surabhi Upadhyay. With me is my colleague Vinny. Hi, Vinny.
Hi, Surabhi. And an interesting day today, right? Coming in. Like yesterday also what we saw was range bound. Today also that 23,500, 23,700 is where the Nifty managed to roam at to off the day's low, off the day's high, somewhere in between and managed to close and ending this elongated week for us at least, right?
Oh, absolutely. I think profit taking was the order of the day, and that's exactly what transpired ahead of the RBI policy. And maybe you can't fault the bulls for that because the Nifty has been on a winning streak. It's recovered almost 800 points from the lows of 22,000, nearly 800, which is where we were just before the budget. So from those lows, the Nifty has moved higher. In fact, let's get the intraday chart up on the screen for you. The end result was 0.4 lower, slightly off the lowest levels of the day. But yes, the fact is that Nifty couldn't really make a meaningful attempt at the 50-day moving average, which comes in around the 23,772 mark. It was around that market open, drifted down from there and never really kind of recovered. The mid-cap index, like we told you in the headline, was even weaker. So if you look at the advance decline ratio, it was absolutely neck to neck. I mean, slightly more than one. You can say about 1.5 stocks declining for every one that was advancing. 1,200 advances, 1,400 declines. So it was a big fight between the bulls and the bears that was playing out today. And, Vinny, if we talk about the sectors as well, barring the bank Nifty, which was relatively better off, it's awaiting that big cue from the RBI tomorrow where the rate cut is expected. Barring this sector, most other parts of the market were weak. Consumer, real estate, PSU stocks. So it was like a all fall down kind of a market, barring a couple of interesting result reactions, which we'll talk about.
Absolutely interesting result reactions. And also, Surabhi, let's not forget pharma. That was holding out some bit of a green. We had some good companies come out with their results yesterday, some carry forward con call highlights. So pharma was some bit of a green. But on the show, we have an exciting lineup for you all. And what we have for you all in store today, we'll start with the top movers and shakers for the day today with Ormas. And then we'll move on to the stocks for the day, which is SBI, Trent, as well as Swiggy. So stay tuned in as we tell you why these stocks were in focus in today's trading session. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. On that note, let's get started with our first segment for the day. And Hormaz is here to tell us which are the top movers and shakers in today's trading session, which are the stocks that were moving today. Hormaz.
One key takeaway, if the street wants to reward you, it will reward you disproportionately without stopping. But if it wants to beat you out of shape, it will without any worries. Take a look at this. Trent, 8.5% lower after its results. It was not an extreme reaction at the first few minutes, but then the stock was just one-way traffic on the downside. SBI 2 ending at the lowest point of the day. Reddington was an earnings reaction as well, ending on the positive side, 6.5% higher on that. And as well as REC, the loan growth being below its guidance, and Kansai Nerolac, another earnings reactions as well. As I spoke of rewarding, before that, because the RBI policy ahead of that, the real estate names were in focus today. Macrotech ending at the lowest point of the day, as did Phoenix Mills and Godrej Properties. Some pressure seen in these real estate names, also Oberoi Realty and Prestige Estates. Almost all the stocks in the real estate index ended lower in today's session. I talk about rewarding stocks after results. Abbott India is one such name. Was up yesterday, up today as well. Solar Industries, after the management cut its guidance, ending 6% lower, and Castrol moving higher yesterday and even higher today, 8.5% higher on that stock as well. And some of the other poor commentary reactions being from Page Industries and of course from Swiggy. We'll talk more on that as the show goes by. And lastly, on the volumes front, GSK Pharma, the top volume-led gainer today, 14.5% higher. Also ably supported by stocks like KNR Constructions and Eris Life, which which gained anywhere between 3 to 5%, and also some other names that contributed to the volume front. Back to you guys.
Okay, absolutely, Hormuz. Thanks very much. Yes, indeed. Very, very striking result reactions and, stock moves playing out in the market today. Thank you for that. Well, let's quickly welcome in our guests. We have Amrish Baliga joining in on the fundamentals, and also Ruchit Jain, Vice President of Equities at, Motilal Oswal. He looks at, of course, technicals. Thanks very much for being with us, gentlemen. Ruchit, let me ask you first, because levels are important. The market giving off a little bit of what's been a good rally last 7-8 sessions. We've managed to climb back almost 800 points. What is the next level for the Nifty to keep in mind on the downside?
Yeah, hi, very good afternoon, Surbi. Well, definitely a lot of factors have changed, which has led to this pullback move. Firstly, we have seen that US dollar index has seen some cool off from the highs of 110. So the 10-year bond yield has cooled off from the highs, and these two are the main factors since the month of October, which were worrying our markets. Now, from the lows of 22,800, where the momentum readings were oversold, we have seen a pullback move. And especially, the FIs have started trimming some of their index futures, at least short positions. Day before yesterday, we had around 10% long short ratio, which has now improved to 18% as on yesterday. So we believe that on the higher side, 23,900, 24,000 would be the next resistance where the 100 MI is coming in. So that level could be tested once, before we go into the a broad consolidation phase. And on the lower side, 23,300 is the immediate support to watch out for. So we expect another leg of up move from current levels towards 23,900 to 24,000, and then probably maybe we should see a phase of consolidation in the markets.
Okay. So keep an eye on those levels. Maybe probably after that level, we'll see some bit of a consolidation. But let's move on and actually talk about the State Bank of India, which also reported their Q3 numbers. We are seeing a decline that came in the stock today. Margins saw some bit of a decline and shrinkage, and that was at a 30-month low. Abhishek Kothari is joining with us to give us details on SBI. What did they miss on what was it that they were managing to do well in?
Well, they missed the cost of funds. Cost of funds have increased massively compared to deposit growth. And earlier, like a couple of quarters ago, they did, bring up the loan growth versus lower yield. So that has also contributed to net interest margin impact this time around. So net interest margin is the weak point in Q3 FY25 results. The overall net interest margin is at 14-quarter low, led by domestic net interest margin at 15-quarter low. International net interest margin is at 7-quarter low. Deposit growth is weak. Overall deposit growth is just 10% YOY and about 2% sequentially. Compared to this, the interest expense have gone up by 13.5% YOY and about 5.2% sequentially. So that's impacted the NII this time around. Cost to income ratio is at 4-quarter high of 55% versus 48.5% in the previous quarter. What's worked for them in the results is that the credit deposit ratio is at 23-quarter high. The quarterly annualized slippage ratio has declined on a sequential basis to 0.4 versus 0.5%. Decadal low or even more gross NPA ratio is one of the lowest that you are seeing in the last 10 years or even more. It's come in at 2.07% when compared to 2.13% in the previous quarter. And robust fee income growth. Fee income growth was higher than the overall loan growth, growing at 16.5% YOY and about 6% sequentially. So the P&L with reference to our poll, the NII is below our poll. However, thanks to lower provisioning, their PAT is ahead of our poll. Back to you.
Sure, Abhishek. Thank you so much for that. Amrish, I'm going to take this to you. SBI seeing such a fall, in terms of the numbers, nothing exciting, right? NIMs at a 14-quarter low is what Abhishek is highlighting. We had weak deposit growth as well. What are your thoughts on in terms of when you're looking at SBI as a stock? And given that the fall, does it become an attractive bet to look at now?
In fact, I mean, some of the disappointments which clearly you just spoke about, I think clearly the cost of funds have gone up. I think that's because of chasing those high-cost deposits. And we have seen deposits going up about 13.5%. And again, let us not really go by the numbers which have been shown in the net profit growth, which was about 84%. But then that was basically due to a decline in provisions, Y and Y. So overall, the earnings were a bit of a disappointment. So I think we should see a further correction. Possibly we could see the stock closer to about 680 or 700.
680 or 700 on State Bank of India. Okay. Ruchit, let's talk about not just SBI, actually other banks, Bank Nifty, trades that you will look at, because beyond earnings, obviously there's a policy tomorrow. So anything in financials?
I think within the banking space, if we see the recent up move, then it has clearly been led by the private sector banks rather than PSUs. And another volumes action also is flowing more into the private sector banks such as Kotak Bank, Axis Bank, rather than the PSU names. So I would tend to avoid taking any trade setups on PSU banks as of now. But yes, within the private banks, I think Kotak and Axis, both the stocks looks quite positive. Kotak has already shown a good relative outperformance compared to other private sector names. In last 1.5 months, the price volume action is good over there. So we believe that one can look to buy Kotak Bank with stop loss below 1850 for potential targets around 2050 to 2100 in the short to medium term.
Okay. All right, got it. Stay on. We'll come back to you for more questions. But now let's look at a couple of consumer earnings, which both of them had like really sharp reactions playing out. First, of course, is Trend. There was almost no stopping the fall today. 6, 7, 8% finally by the time we closed out. At a time when the top line numbers seemed more or less in line with expectations that have obviously come down over the passage of time. Let's go across to Mangalam. Mangalam, I don't know if any of the analysts saw this coming, but what are the internals saying? What do you make of the numbers?
Well, if you look at the Trend stock, it was down 8%. You wouldn't believe that the company reported 35% revenue growth, 35% EPS growth, and 18% margins in an industry where consumer sentiment is weakening. But remember, this company has been used to showing over 50% sort of revenue growth earlier, and the last quarter is when they disappointed the street by growing at 39% versus expectations of 45%. This time around, the analysts moderated their expectations to 35% on the top line and nearly 35-40% on the bottom line as well. And as a result of which, the company met those moderate expectations. The stock, after having corrected 30% from the highs as well, was trading, from a peak of 120 times to about 80 times. So valued perfectly, so no room for disappointment. In fact, the street was hoping for some sort of positive surprise coming by because of the festive tailwinds, but no, the company reported in line with moderate expectations sort of performance. And the key disappointment actually was the like-for-like growth was at high single digit, which told you that most of the revenue growth came in on account of store expansion, and out there as well the company is planning some store optimization. So when a stock trades at 80 times with 34% EPS growth, it's trading at a PEG ratio or price to earnings growth ratio of around 2 times, which was pretty similar to the time when the company grew at around 50-60% and the valuations were around 120 times.
Absolutely. Thank you so much for that, Mangalam. But do stay on with us because Swiggy is another stock that you are tracking, and that has also fallen 5%. And this is after a mixed bag of numbers was reported by the company in Q3. Take us through those highlights for Swiggy as well.
Well, Swiggy reported a mixed set of numbers this time around. If you look at the overall performance of the company, the food business did a lot better than its competitors. So food GOV grew at around 19%. It was the Q-commerce business where, a lot of growth was built in. The company grew at just 88%. I call it just 88% because its competitor, Blinkit, grew at around 120% on a much larger base as well. And it's this investment in the quick commerce space which has led to the company report a big EBITDA loss, and as a result of it, net profit loss, or rather net loss of close to around 800 crores as well. So the company reported a mixed bag with food business doing a lot better, but investments in quick commerce and the sort of uncertainty that there is with regards to competition out there has the street a little worried. If you look at the overall performance of the company, the food delivery business saw margin expansion as well, and the company did stand by its guidance of becoming EBITDA positive by the third quarter of FY26, and the quick commerce business being contribution margin positive by third quarter of FY26 as well. But the street was in the mood for profit taking today. The stock had already corrected 13% since Zomato's results and 30% from peak. But today, despite that, saw a big gash down about 7% and very actually closed below its issue price of 390 rupees.
All right, Mangalam, thanks very much. Yeah, big blow on both of these stocks. Ruchit, very, very quickly on Trend, do you see any support levels? Stock's already down 35% from the peak.
I think the stock had seen a significant run-up in 23 and 24, and now it seems to be retracing that entire uptrend. And 50% retracement of this entire previous rally is coming somewhere around 4,800, 4,750. So not around current levels, but I think the stock could see these levels around 4,750 to 4,800 where the support would come in.
Okay, Richard, thank you so much for joining with us, as well as Amrish. Thank you so much for giving us your time and talking to us about the stocks that were in focus as well today. But on that note, we're going to step into a very short break. We'll get you the top corporate voices along with the key market events to watch out for on the other side of the break.
Welcome back. You're with us on Markets Forward. Let's take stock of the big corporate voices that we picked up during the course of the day. Kansai Nerolac gained over 3% after its third quarter numbers. Speaking to CNBC-TV18, the firm's management said that its decorative volume growth was between 1% and 2%. It added that the company is expecting to see good growth for the segment in the next quarter as well. The endeavor, the firm said, was to maintain EBITDA margins of around 13%. Meanwhile, Sula Vineyards failed to deliver in the third quarter. The company's management said the margins in Q3 had bottomed out but expected to see an improvement from the next quarter itself, and the improvement could be 250 basis points. The firm says that they're expecting FY26 to be much, much better. Let's move on, Vinny. We have the next set of companies, PVR.
Absolutely, PVR Inox. We spoke to Ajay Bijli of PVR Inox, who said that he doesn't think the fourth quarter will be as good as the third quarter. However, the company has an exciting pipeline ahead, and Ajay Bijli said that he is expecting 2025 to have a better occupancy level, while ad revenue momentum is expected to sustain. The company sees headroom for growth on ticket pricing. That's not all. We also had a conversation with the management of Hexaware, and they said that it has strong track record of outperforming the industry over several years and was confident in its ability to maintain this momentum. The firm added that it expected to sustain its current levels of adjusted EBITDA margins and said that India and the Middle East represented key growth opportunities for the company. It has also set an ambitious aspiration of getting to $3 billion in revenue. Last but not the least, we also had the management of InfoEdge that said that and are confident not even as the firm's management shied away shied away from giving the guidance. However, it did say that recruiters' activity was seeing an increase while non-recruiter was doing well. The management said that 99acres was now cash neutral, while Jeevan Sathi was flirting with break-even.
And before we wrap, let's get you the key events to watch out for. Abhishek is here with the details.
Well, the big RBI policy will be tomorrow, the 1st of 2025. Interest rate decision will be a key factor to watch out. Our polls suggest 25 basis point rate cut tomorrow by RBI. Also, watch out for where the cash reserve ratio and etc. are being kept by RBI, and any leeway with respect to risk weight asset to advances ratio that they have put for banks, which had been increased last time for NBFC's loans, that will be tapered down or not. So, Forex reserve data will be also keenly watched. It will come out from RBI. Last time it was around $629.56 billion. Key stocks that will go ex-dividend tomorrow is CAMS, rupees 17.5 interim dividend, GAIL with respect to 6.5 rupees of interim dividend, and Nestle India with respect to 14.5% of interim dividend. Earnings season, so results tomorrow are LIC, M&M, Oil India, Ola Electric, Wockhardt, as well as Zaggle. Also Dredging Corporation, Edelweiss, Gokaldas Export, SCL Infosystem, Honeywell Automations are some of the key results to watch out tomorrow. Back to you.
Okay, Abhishek, thank you so much for that. And also 70% of the market participants polled by CNBC-TV18 are expecting a 25 basis point rate cut from the RBI tomorrow, while 60% are betting on RBI to announce additional liquidity measures in what will be the new Governor Sanjay Malhotra's first policy. Ritu Singh is here to give us a report on that.
For the first time in nearly 5 years, the Reserve Bank of India could kick off a rate-cutting cycle, making Governor Sanjay Malhotra's debut policy meeting one of the most closely watched in recent history. Now, RBI has been injecting massive liquidity into the banking system in recent days, which some interpret as a precursor to a rate cut, despite the relatively high inflation. So the CNBC-TV18 monetary policy poll shows 70% of market participants and economists are betting on a 25 basis point rate cut this time, driven by the need to support growth. But ignoring the rupee's depreciation can prove tricky, which is why 30% of the respondents still voted for a dovish hold. Now, liquidity remains tight in the system, but a cash reserve ratio cut at this point seems unlikely. But 60% of the respondents do expect additional liquidity easing measures like more OMOs, longer duration repos, or a cut in the incremental CRR for NRI deposits. Of course, markets will also watch closely for any clarity on the new LCR norms, which are set to kick in from the 1st of April. Now, external factors are going to add a lot of complexity to this policy. RBI is likely to acknowledge the risk from the tariff threats and stay nimble, but a small section of the market believes that inflationary tariffs and a weakening rupee could be used as an argument to push out rate cuts. But the broader consensus is RBI will allow a gradual rupee adjustment while ensuring stability. Now, markets are already pricing in steeper rate cuts beyond February, with most expecting anywhere between 75 to 100 basis points cut in this cycle to give a helping hand to growth. Now, despite these expectations of rate cuts, the monetary policy stance is likely to be left unchanged at neutral. But as for the tone, 40% do anticipate a dovish tilt, while the majority expect it to be neutral. Now, growth expectations are softening. 90% of our respondents predict that RBI will lower its FY25 GDP forecast to 6.4 to 6.5%. That could further strengthen the case for easing. But the inflation forecast is unlikely to be tinkered with in this policy. So all eyes are going to be on Governor Malhotra's debut policy move. Will he pull the trigger on a rate cut or stay cautious amid global risks? The stakes are high and the markets are going to be watching.
Oh, they definitely will. Ritu, thank you so much for getting us that heads up. So 25 basis points rate cut. That's the big expectation in the equity and in the bond markets alike. So let's see if we get that, Vinny.
Absolutely. But with that, it's a wrap on this edition of the show. Thank you so much for tuning in. Don't go anywhere. More news and updates on the other side.